Welcome to Decelerator. I'm your host, Rob Kennedy, and today I'm talking with JF Gauthier of Startup Genome at the Web Summit 2025 conference in Vancouver. Let's talk startup ecosystems. I had the chance to go to Vancouver for Web Summit's new home for 2025, and I have some further thoughts on that. Check out my newsletter at decelerator.media. Nonetheless, I had a chance to sit down with JF Gauthier, the founder of Startup Genome, who's been chronicling and ranking startup ecosystems around the world and then trying to help them improve in their rankings and improve in their innovation outputs over the last decade or so. His latest report just dropped, and I had this chat just before he dropped the report, so he's kind of a bit cagey on the numbers. Nonetheless, there are a few buckets that really stood out to me. One, obviously, is that while there was a lot of undulations in innovation ecosystems around the world, they dropped 23% globally, which is their biggest drop ever. The innovation economy still grows 4 times faster than the rest of the economy. Secondly, AI is messing with all the funding models. So, VCs are dropping gigantic checks, $20 million from Andreessen Horowitz for seed checks, which is unprecedented. Angels need to move faster and earlier. And he believes this is just the third epoch of tech. So first, I think, was PC. Second was internet. He believes mobile was an iteration, but this is something net new. And he believes that government's job is to de-risk and undergird the 0 to 1 process and then sort of get out of the way to let the private sector move. Because we were in Canada, he mentioned that Toronto, Montreal, and Vancouver have slipped in the rankings, where one thing that surprised me, he said that Philadelphia has done a really good job with almost no government involvement, basically mobilizing the ecosystem to get things going. And creating those learning loops. He gave an example of something that happens in the Valley. When DeepSeek came out, all the CTOs got together and within days applied that technology to their stack and tried to see whether it improved or didn't improve things, and shared those learnings across the entire ecosystem. So this sort of deep connectivity is not just a capital thing, but it's a culture thing, it seems to me. So my takeaway is it's a fascinating discussion in how he thinks about the universe. Since then, they've dropped the report, so you can check it out. But I'd be interested to hear your take on his observations about the tech ecosystem and where it is and where it's going.
JF, thank you for joining me at Web Summit in this very deliberately planned and structured interview that we've been planning for months for. We met 2 days ago.
That's right.
Why don't you tell everybody?
Do it.
I know. That's the startup way. Why don't you tell everybody what the Startup Genome is and what do you do?
Startup Genome is the leading innovation policy advisors to large cities and big ecosystems in all the world. We also, of course, give back to smaller ecosystems. We worked in Palestine, for instance, and Gola and others, really to help them do better policies for us entrepreneurs, but as a way to build a bigger engine of economic growth and job creation for our societies.
Yeah. And so what's the business model for Startup Genome?
Well, for us, we're basically the publisher of record for the tech ecosystem sector. So we study everything. We have all the data. We have the best data in the world that's very curated. And then we use that to see what are the gaps in ecosystems,
yes,
in cities, in countries, in provinces here, of course, to advise our governments who already have scarce amount of money to invest so that they focus it on the big bottlenecks that will unlock the potential. Our business model is, of course, then consulting, but also we do programs where we help foreign companies outside the U.S. go into the global markets and the U.S. market through mentorship and also entering open innovation. I think corporations actually work with global startup ecosystem and meet their KPIs and accelerate their innovation, make it cheaper, faster.
Just as a nerd, where does the data come from? Like, how do you gather that data?
Well, so we bring the biggest databases in the world. So Crunchbase, PixBook, Dilru, and Traxon.
Yeah.
And they all have a lot of errors. They're not very well structured. So we correct it with AI and machine learning and manually also verify everything to make sure we have perfect data. So we have the best data because of that, because any one database has partial data, has errors, and so it's not reliable.
Yeah.
Once we have reliable data with a standardized definition of ecosystems, then we can start doing benchmarks that reveal the issues.
Yeah. I mean, you've been doing this. I mean, I've been following your work since 1965, I believe, is when you started.
Yeah, about that. Yeah, a few years before I was born.
No, when did you start? Like the early 2000s? Or
2011 with Steve Blank.
Right, that's right. Great reports. So you're weeks away. I mean, maybe by the time this actually goes out in a couple weeks, you'll have launched it. But you're about to publish your 2025 report in the middle of 2025. What's going to happen in the future, JF? Please tell. What are the patterns that you're seeing?
Well, in the future, it's going to go back up because right now it's been going down. So the ecosystems dropped. The global economic value of startup ecosystem, which we call ecosystem value, dropped 23% from last year to this year.
And what do you attribute that to? Yeah,
it's because, of course, of a drought of funding, the correction in valuation that was needed, that followed a correction in the growth rate of the startups, because, during COVID, people adopted digital solutions faster than ever. And that created really growth, increased valuation, inflation in valuation. And then investors said, let's sit on the sideline as it comes back down to reality. But they've been sitting on the sideline a bit too long. Stock markets are in trouble with the trade war and all that. But now I think we hit the bottom and it's going to grow. But what's growing a lot is AI, of course. And so when you look at AI, actually the ecosystem are betting on it. Of course, Silicon Valley leading as always. We see that early stage funding is up, 15%, while everything else is down.
And how do you measure the efficacy of a startup ecosystem? Because it's kind of like it's almost like a lagging metric. You have to wait 10 years to see whether it's a thing. How do you know that it's?
Yeah.
Is it just funding? How many companies are funded in a given?
Well, so the goal, of course, is economic impact. So it's job and economic growth, FDI, right? Exports, all of things that create a big multiplier of jobs, of 4x per tech, because there's so much exports and the profit margin is so high and there's so much FDI. Mm-hmm. So we measure really the output of exits and valuation of those IPOs and exits. But really our ranking is based on lagging and current and forward-looking indicators, right? How many startups, we know it at a certain size, it creates a certain percentage of exits already. So we rank already with that forward thinking in mind, so that when a step goes up, it's because the future is getting better, not just because the exits went up, which was a lagging indicator.
Exactly.
It's a mix of.
So to unpack that a teeny bit more, is it like number of companies funded by investors beyond a certain point to know that because you said
very much at
year over year went down? How do you know?
We look very much at early stage and behavior in early stage creation of startups, seed funding, Series A funding, because this is really the investment of the society, of the community, of the innovation ministry, economic development ministry, and the private investors into creating exits in 5 to 10 years. Mm-hmm. So this is the core of our research. It's not a lot exits. So then when we see this growth, we know growth and exits will follow, because at scale, these ratios are very, very predictable.
Yeah. Oh, interesting. Okay. Well, actually, we're going to talk about AI in a second, but one observation I've been doing this for a while too. I'm bald. And the one thing that I've noticed is, like, there's anecdotally the definition of a startup, Steve Blank's definition, I think it was like a product in search of a business model or something like that.
I'm not repeatable and scalable business, a company in search of a business model.
Exactly.
Or in search of a scalable and repeatable business model.
Right.
Temporary organization in search of a repeatable and scalable business.
We'll edit this so that we get the definition perfect. And I'm not sure that is quite the same animal as it was 15 years ago. Yes, those kinds of companies exist, but it feels to me that the term startup has been co-opted to mean any kind of business that happens to touch a technology, which is problem number one. And problem number two seems to me is with AI, people are vibe coding these companies. So I feel like that's not a good indicator of, are you actually building a startup, and is the startup ecosystem thriving? These could just be small businesses, nothing against them. That the point of this show is to be like, anybody can create a tech company, but does that mess with what you're measuring?
Of course, we continuously change what is a tech startup.
Yeah.
How does that definition apply?
Yeah. What is it today?
Because, for instance, in the 90s, an e-commerce business was a scalable business that was new in search of a business model. And at one point, it was not. It was just retail.
It's just commerce.
Online,
Yeah.
right?
Yeah.
So then we took out e-commerce from the ranking. We're like, e-commerce, not good. And then then subscription model happened. And we're like, oh, that's innovative. VC started investing. That's like, well, that's new and really hot. It's going fast. VC money is going. Let's include this. And then 3 years later, we're like, let's take it out. It's old. Nobody's investing in it. And then cannabis retail started opening, right? So continuously we look at it, but sometimes you cannot tell whether it's a new business model that is riveting, right?
Yeah.
But what we've learned is that the ecosystem are more productive when a lot of people are trying different crazy things. And when I saw Twitter, of course, I thought this is lousy innovation.
Yeah.
85 characters messaging. I'm like, come on, really? And the investors agreed with me. Nobody wanted to invest at the beginning. But guess what? It wasn't innovative. That created a new business model. Facebook's is the same thing, right?
Yeah.
So therefore, all this experience that happened in the 90s, a lot building and trying with web to do things, all paid off because that's how we created complex backend software that became AWS and Google Clouds, and that allowed deep tech to happen.
Yes.
Before that, we couldn't. And AI is the same way, right? Gen AI does all of these crazy things. And some took off, like these high school kids created. You take a picture and you analyze it and tell you how many calories that is. And in 1 month, while still in high school, they got to $1 million in monthly revenue.
Yes.
Right?
I've failed as a human being personally. I keep learning that.
That experience is what building in 5 years that will do complex AI. We know how to build the business model, what's working, what's not working.
Yes.
And so we need to fund and try a lot. And a lot of it seems to me like something like really ridiculous. But that was like eBay classified online. It sounded so ridiculous, so small and not important. And selling books online, I'm like, whatever. But that's Amazon, right? So you can never judge it.
Actually, AWS really drives the...
When it's new and scalable, this is a good experiment.
Yeah.
And it's worthy. And right now in AI, we're learning what is working, what will work, what not work, and we're accumulating experience at extra speed, so that in 5 years this will be really adding economic value.
So how do you, what are, spoiler alert or whatever, what, aside from like the kind of dip in sort of
ecosystem value,
in the last year, what are other some sort of headline metrics, if you're comfortable sharing them, that you're paying attention to this year?
Yeah, so we see first of all, like who has gone up and down the COVID ride,
boom and bust,
and see who really made progress. So it's really a benchmark on policy, who really invested in the right way into the ecosystem over 5 years, pre-COVID and post-COVID, where we're at. So we're settling the accounts this year.
Okay.
And really, of course, AI is messing that up a lot.
Yes.
Right? Because those that are invested in AI, we can see they're going up in the ranking. We see China is going up in the ranking because they've invested in AI, but also they've continued to invest maybe more than others. But they also dropped during COVID a lot because of constraining COVID policies. But what we're seeing is, in general, there's AI growing, not much else, right? Clean tech is not so bad. Mm-hmm. But we go back to seeing what little subsectors are going well. So advanced manufacturing, robotics, still fairly small, but still growing very fast, right? We saw that ed tech came back down. It was really helped by COVID, but it's not that anymore. Life sciences, cyber, right? And is good, continuing to grow. Of course, Bitcoin is hot, back hot. So now we're clarifying those big trends and what's really good and not. And then, by region, we see that Europe has not been investing enough, right? We're constraining COVID policies, not that much investment, lots of constraint on privacy, and that is really hurting them. It's hurting them in the long term. Now we can see over 5 years. And we have data over 10 years. It's a bit less relevant.
Yeah, unpack that a bit. So you said, got the China thing, which is China is pretty deliberate in their investing. Yeah. The lockdown didn't help. Having humans not able to do things was not helpful. Yeah. But they're clearly focused in certain directions like AI, ML, and drive cars and stuff like that.
And lots of technology, batteries and cars.
Right. Yeah. Right. So they're very focused. The EU, is this you're suggesting that something like GDPR and that kind of stuff has actually hampered the growth of innovation in that general like part of the world?
Yeah, I think the culture of taking risk, of letting loose a bit so that AI develops with not too many guardrails,
Yeah.
so that it develops faster,
Right.
right? It's paying off in China and the US and places that are investing without guardrail, right? We used to talk about sandboxes, but sandboxes freeing you from long laws like in fintech that are difficult. But when you put a lot of guardrail around any new technologies, it's not going to develop.
Is there something specifically around, like, I feel like the regulation around AI kind of doesn't exist. We're sort of making it up as we go along, and there's tension around like what the right amount of regulation is. It feels like other than GDPR, is it what's happening in the EU that is stopping them?
I mean, it's a focus of the governments to do it well and carefully,
right,
as opposed to the US of breaking things.
Move fast and breaking things,
which we see with the president right now.
Yeah. But like
breaking things and see what happens, and really pushing the entrepreneurs to actually try to create enormous value by not focusing on that. So there's a lot of responsible AI instead of let's build big models and let's multiply the different business models to see which one will grow and create a community of that. And so you see a completely different approach, right?
Right.
We see Canada, and when we look back 5 years, and it's not going so well either. And that's a very important message, right? In 2015, 2017, in our reports, Toronto went up to number 13 in the world. Vancouver, number 15th.
Yeah.
Vancouver now is 36. Toronto is 20th, right? So a real slide in the ranking because we've not invested in the top of the funnel.
Right.
We don't invest. When we try to invest in commercialization, that's important because it's a big problem. But when we invest, usually we invest in research, in universities, in deep tech, and not enough in just creating more startups, de-risking the investment of early stage investors in tech in general. Now even more needed in AI as they have to learn, how do I invest? How do I not lose my shirt? Can the government help me de-risk so I learn faster, I take more risk? So we support the ecosystem. So we can see the result of that lack of investment at the top of the funnel in Canada over the last 5 years.
I think one mistake that I think any ecosystem makes, Canada is no different, is that we always compare ourselves to like America, biggest economy in the world, very spendy, very risk-takey. Yeah. That's basically unlike any other economy, more or less, on the planet. So comparing yourself to an economy that you are not, like the example I always use is, OpenAI raised $6 billion in the fall of last year at a valuation of $137 billion. Canada, their darling is Cohere. That company's worth $6 billion. So you're not playing the same, you're not one's checkers, one's chess. Yeah. How do you advise ecosystems around the world to think about how to invest, how to unlock? Like there's obviously a cultural and attitude thing, which is a difficult thing to change. But there must be a pattern amongst not America and not China that you're like, this is how you need to play the game so that you actually are competitive and have a wedge or a moat around your ecosystem. What do you suggest to those people?
Well, first of all, I want to say the US is not the US, right? There's Silicon Valley.
Fair.
And Silicon Valley was never built. Right. It just happened because we created the computer industry, semiconductors there.
They invented venture capital.
So let's take that out. We never teach what's happening in Silicon Valley, how to build it. We learn from how did Tel Aviv build from scratch? Yes. An ecosystem that's number 4 or 5 in the world. Singapore, right? Well, how do we actually build this? How did London go from being top 10 to number 2 in New York, right? What are those policies that a government can do to seed the private market to actually take over and grow really rapidly? And so that's what we look at. So when you look at Vancouver or Toronto, you don't compare it to Silicon Valley, you compare it with Austin, you compare it with others. Exactly. And when you look, we all see the US is risk tolerant, and there's a huge market. It's true of Dallas. Dallas is one of the biggest economies.
Yeah.
What they do in startup ecosystem, they're way behind Montreal and Vancouver, right?
Interesting.
So now, and Tel Aviv is way above them, and they're 5,000 miles away, right, or 10,000 miles away. So therefore, that's not the problem, right? We can build a startup ecosystem. Then we go back to what it actually is going to take for you to build it? What are your strengths, vertical strength? What are your strengths on the talent side, universities to propel that? And what are your local markets that can start the growth of revenues? And that's where we advise, right? What do you have? And what can you build from? And if you invest, it's going to have a multiplier because we build on your strength.
Right. But, maybe one of the critiques typically of, I happen to live in Canada. So one of the critiques is the government will save us. And everyone looks to the government to in Canada, there's tax credits for research and development, for example. That's what, so, that is a critique of relying on the government to sort of help these things. Is that a fair critique, or is that?
Well, it's
looking at it through Silicon Valley lenses that don't really apply to this.
Well, I look at those that have been extremely successful, and yes. Toronto was one of them. When in the 2000, 2010, 2005 to 2019, really have invested aggressively in the startup ecosystem, and Sweden did the same. Tel Aviv, Singapore, right? It works. The private market is failing at building a engine of growth like Silicon Valley. It's the jobs of the future, it's the economy of the future. They're resilient jobs, they're high-paying jobs. You want to invest to create that, right? Korea changed their whole economy because they invested early in semiconductors. They were poor. Taiwan, same thing. Singapore, same thing. They invested early and not that much, right? Mm-hmm. Like I always say in Quebec, if we did not build a big dam for hydroelectric and we built one semiconductor assembly plant like Korea did, right, would be the richest province in Canada, right? True. But we did it. We said, how can we ship resources and develop and harness our resources? And AI is the same thing. We're not yet good at it, but we're 2 years after ChatGPT. This is when Israel invested in developing a web economy. 2014, 2 years after Netscape.
Yeah.
They invested $300 million a year, not a riveting amount of money.
Yes.
Now, because of the private is much more prone to follow the government showing the way, you have to invest even less.
Yeah.
Right? It happens faster. So now it's the way of saying, the government is not the mom and the dad that is investing and supporting everything, but you need to seed to get the private to follow,
right,
and stay out of the way. And in some ways, the governments here doesn't seed enough at the top of the funnel,
right,
and then it's too present later, right? When you look at their services, the government's trying to do a lot for the startups instead of seeding private institution organizations supporting startups with the goal of profit in mind, instead of a government employee who's averse to risk, don't want to lose their job, not going to make money even if it turns well, but if it turns bad, will be punished, right? The role of government is to go from 0 to 1 smartly, learning from Tel Aviv, Singapore, and all the experiments we've had. We have 30 years of experiment. And from 1 is get out of the way and stay away from grants, right? Governments writing grants. What I want to see more is the grant money going to angel investors,
right,
that can write checks from the government, but develop a relationship and start mentoring the startup.
Right.
And now the startups is gaining a lot more, and you're training a private person with that money to become a good investor, and that's a perfect use.
It's a culture shift too, right? You're changing the culture into an innovation-based culture as opposed to selling the stuff underneath your feet.
But we have to realize we're competing with other governments that have realized that this is the number one engine of job creation, economic growth of the last 10 years and of the next 50 years, and that they're investing aggressively. So if we don't invest, we're falling behind. Right, and so we need to invest, we need to seed, we need to work, and the government didn't stop completely investing in the last 5 years, but clearly invested less than Seoul, that went from 30th to 8th in the world. Toronto went from 12 or 13 to 20th. Right, this is the comparison. The government is not supporting the private enough, but it needs to stay out of the way else.
Is there a 2024, 2025 example you've seen of a nation, a city, somebody who's doing it right in the universe that we happen to be in right now?
Well, one story I like is Philadelphia. That is really also the government has not done that much except felicitating and showing goals, and the private has been organizing to do it by themselves.
Right.
And really going up in the ranking extraordinarily and doing well in AI, which is really a great story. That's not government-led, and that can happen.
So are they creating some sort of conditions for success, or are they just convening private and say, go that way? And
where there's foundation and Chamber of Commerce and business leaders saying, yeah, let's invest together, let's align, let's develop strategies to really grow.
I see.
And of course, there's the other way, which is more government seeded, or what we've seen, the growth that we've seen a lot is soul, with really government led, but with big industries able to follow, a lot of educated people able to follow. So there's two big stories that we see.
Yeah, like to me, Korea is like, we make things, we make chips, we make screen. Like there's a lot of manufacturing there where you feel like the government has to be involved in some way, shape, or form. Or it's easier because it's a very expensive, capital intensive. Whereas I'm imagining Philadelphia is like, we're going to make self-driving cars, and they're investing in software, or I imagine not physical infrastructure or is that right?
Yeah, but also it's like, even though they do a lot of cars and all this, the software ecosystem was very small.
Yes.
Because people wanted to have a good job working for Hyundai.
Yes.
And so you had to create this new path, like Singapore did. It was very difficult in Singapore also, and there's high aversion to risk in Asian countries. So back in 2018-19, with a population of 25 million people, it was smaller than Toronto, the ecosystem. And now it's much bigger, right?
Yes.
It's a really great story of like government initiation and letting the private then grow.
Right. So let's end this off by talking about two things. The current state of the art on the entrepreneur side, because of this AI revolution that we're midstream on, and then on the investing side. Starting on the entrepreneur side, we're in a great deal of change. We're in the middle of another one of those, hey, it's the internet, hey, it's mobile, like something clearly tectonic is changing. And what are you seeing on the entrepreneur side? With vibe coding, you can spin up a software company in an instant. So you've got weapons of mass destruction on the software creation side. And quite frankly, we have weapons of mass destruction on the go-to-market side with Clay and Apollo. You can do all the things. Yeah. And, there's always that hype cycle where it's like, look at all the cool things you can do. And then it shakes out to what is the longer-term value that you're creating in this technology stack. Certainly, we've got, I think, commoditized LLMs that are foundational, but they continue to eat up what these companies are ultimately doing, which again happen in mobile too. What is the pattern that you're seeing? Does this pattern match previous patterns in entrepreneurship? And what are you seeing? Like, is there an opportunity here for entrepreneurs, depending on the ecosystems they're in, to do something different, or that is something that they can actually have a durable business at this point in the universe while we're figuring shit out, or are we not there yet?
Yeah, well, three things. First,
that was 9
we
questions,
call it.
by the way.
Exactly. I'll do three answers. First, we say it's the third era of exponential growth of startup ecosystem.
Yeah.
There was a computer, then there was the network computer, the web.
Yes.
Right. This is 1992, Netscape, and now we have the thinking computer. This is 2000.
So mobile for you is just a iteration on the.
Yeah, it was just other technologies, but it was not completely changing the game. Right. Before, we're selling computers and some software attached to it, and then suddenly, packaged software companies all died.
Yes.
Right. There's no packaged software companies created in the 90s that we know of, because they all died except for Microsoft, Symantec, right? That were already billion-dollar companies. They survived
By pivoting,
but
to become
changed,
SaaS. Yeah.
right?
Yeah.
And now AI is gonna, Benioff and many say SaaS is dead.
Yes.
Right? All the SaaS companies we're creating right now will probably get killed by an AI company.
Yes.
So let's transition our ecosystems, right? And what we learned from Israel in '94, they had no Cisco, 3Com, they had no platform. They didn't have a Netscape. They didn't have a Yahoo, InfoSeek at home, Alta Vista, and Google. None of that. No platform investment. They created an app ecosystem. A lot of people creating business solutions and businesses that create value for a consumer or a business person. And when we look here now, right, we have these armies of startups. There's 500 AI startups in Vancouver. Right? It's growing rapidly, and that's what we want to support, a multiplication of experimentation on what can we create that will make money, so that Canada, doesn't create only researchers that end up graduating and working for Google or OpenAI, right? Or patents. 93% of patents, AI patents in Canada, are owned by foreign companies.
Yes.
It's not working.
Right.
We need to create businesses. This is what creates money. This is what hires local people working for local entrepreneurs, exporting, and keeping the profits and the tax dollars. That's what we want to create.
Right.
And so 500 is a good start. It's not too late. We're 2 years after. It is exactly when Tel Aviv and Israel invested. We're at the same time. This is the time right now to invest in a creation and bring in more and more serial entrepreneurs and new entrepreneurs with ideas and new technical people to actually jump and create business solutions, consumer solutions that will really bring Canada to the next phase, back up in the startup ecosystem and the new economy, really getting a bigger share of the new economy.
So you're in charge. You're in charge of Canada and each province and each city, or pick the ecosystem. We don't have to focus on Canada, but we have to meet Canada. What would you say? What would be the levers you would pull or push?
Well, so what I see is there's a lot of startups being created, but not enough.
Yes.
Right? About 8 or 9% of our startups right now are AI native. And whereas in Silicon Valley it's 20%, Philadelphia is 15% with, Y in Philadelphia.
Yeah.
And so even though we have a lot of the foundation, we're not turning our business nor our technical people and our business people around them to create more. So early stage programs to create pre-accelerators, stuff like Startup Weekend, and then accelerator programs that actually help those startups, because you asked, one of your 9 questions was like, what's happening in AI? What are the challenges? And it's very different challenges. The lean startup methodology doesn't hold anymore.
Yeah.
We need a new lean startup methodology, right? The concepts are good, but when you code your software in 1 hour in a week, now the testing is very different. It's not a bug. It's like, is the customer solution is actually working? Is it hallucinating? All that kind of stuff.
Yeah.
But you go quickly to lead customer acquisition. That's usually what you do a year later, right? So now it's very different. And we need support. Accelerators are focused on that. And then we need programs to help our investors, our angel investors, our first investor, and also our VC, and learn, not just Radical Ventures that's doing a great job, but all of the community of investors learn, hey, how can I learn from Silicon Valley investors that have been already investing in this successfully? How can I do it? So really bringing the ecosystem knowledge up. Our mentors also, updating them to how do you mentor an AI startup? What is the right path to success, and learning from each other and creating communities where they can meet and share that knowledge. Not with SaaS, right? They're very different, the community in Silicon Valley.
Okay.
It's like life sciences, the biologists, the inventors on the life sciences startups, they don't talk to the SaaS people, enterprise software.
Right.
And surprisingly, the AI native founders and CTOs, they don't talk to SaaS. Right. They're like all there trying to tweak their models and seeing how to sell, to pitch to customers in a completely new way, which has value creation a little bit more fuzzy. It's not a deterministic software. We're going to do this is exactly your problem. This is exactly what we're going to do. We're going to plug in into SAP this way.
Yes.
And AI is not like that. So all of this, right? Bringing all of our community to update and grow in AI native so that we're a leading player, because we have a chance. We have a chance to leapfrog, right? Toronto's 20th. It could be a top 10 if we play our cards right. Vancouver could go back to a top 15 position. Montreal also to a top 20 if we act quickly and we help our AI native startup ecosystem grow really rapidly. And that's all the top of the funnel.
Right. On the you talked about the investment side. Let's talk about the investment side, at least from my experience. But you have data that may contradict or validate this. Is people have been VCs have been fundraising. They still have the 10-year fund cycles. They're all over the place. So there's some capital investments that investors have made that are midway through their journeys, and they're being eaten out from the bottom end by these. So they're like, this company I'm invested might not exist in a few years because of AI. Then they're turning their attention and looking at AI native companies who are kind of flipping the script as well. Are they in trouble, like the way that investors should be looking? Are you seeing patterns about or changes in the way that venture capitalists or any kind of investor, angel investors, are thinking about the investments and the payoffs and all that stuff? Are they kind of in trouble depending on the size? Like, are seed investors? Well, I've talked to some VCs who are like, there's going to be no seed investment. There's going to be pre-seed and there's going to be Series A, and that's it.
Well, what we see, just to answer that last question first, is the VCs are coming down, right? The VCs in Silicon Valley, Andreessen Horowitz investing $20 million at seed. They've never done that. That's never happened. It's true it's coming down, but there's still a role for the seed, the angel investors, to do $1 million before.
Right.
But Andreessen's investing $20 million in a year after formation, a year and a half. So now we need to be writing small checks reasonable size checks, probably bigger than in the past, faster. And that's difficult for an angel investor to do.
Yeah.
Right. But what we see in the established companies like a Shopify, it's like a Facebook in its domain, right? And so they will be adopting AI. They should be acquiring AI companies just like Facebook does, Google does, right? Google had bought DeepMind, right? They didn't create it.
Right.
So for the incumbents in a vertical or in a space, this is the play. They're not going to die because of AI unless they don't adapt, but they can adapt through acquisition. And mid-stage companies also. If you think about, right, companies are great in supply chain right now. That is all mathematical formulas. They don't use AI. They can do it. So you want to look at in your portfolio, am I supporting a company that has understand the problem of the customers very well and starting to use AI to solve it?
Yeah.
So that they're resilient to AI. And then how do I start investing in pure AI native startups that will be the next winners?
Right. So because you can get as an entrepreneur, like I'm imagining the thesis is like, look, you can get to revenue and customers very quickly now because it doesn't take long to build something, and you can even prove things out, which is why I'm imagining it goes from 1 million to 20 million in a very short period of time, because you're like, cool, you've proven it out. Now it's a scaling problem. I imagine there's some AI credits that you need to use. So it's very expensive to scale, but also there's probably some go-to-market stuff, because if everybody can go to market with everything, then what the heck is the difference between companies?
I mean, it's still like on the B2B side, still relationships, right?
Yes.
And are you proven? Do you meet our criteria? Is it dangerous? Is it right? Security, governance. So there's still, it's not, those companies that are growing extraordinarily fast. They're not the majority.
Yeah.
Right? This is 2% of the AI companies.
Yeah.
So the work still has to be done. The coding is faster, but around the coding,
Yeah.
the experienced CTO that brings software to make sure it's encapsulated well, that has permissioning, that has security, right? AI doesn't solve that. We
Right.
still have, so there's still a path that is long, right? You can code in 1 week, but then probably preparing it to be usable, that's probably still 3 months, 6 months, right? For the MVP. So it cuts sometimes, but the rules, a lot of the rules still hold, and it's not a revolution where, many companies will become big overnight. It happens, but it's not the norm.
Yes. The thing that I would struggle with is like, is AI a feature or a product? And I feel like for the LLMs, it is a product, like the core thing. But for everyone else, is it really like a lot of these?
It's not just a feature, right? Because it's like packaged software versus web software.
Right.
You still code in C++.
Yes.
But it's a completely different model.
The business
Completely
model is
different
different. Yeah.
right?
Yeah.
And so therefore, for AI native, finding the solution, defining it, what's powering defining the solution, and helping solve the problem is completely different. And unless you start learning with this tool, then you're the package software company. Right?
But is it not
And
just
so now AI native is going to break everything, because they're going to start with AI natives. Customer service is starting with AI native. Everything is powered by AI native, and it's trashing a lot of we start with web.
Yes.
Right?
Yes.
And so that's a complete change of the whole ecosystem. I think everybody in 5 years will be starting with AI native solutions. And yeah, you still code permissioning and security around it. Yeah. But the whole fundamental business model, the whole ecosystem is changing from web-based after going from packaged software and computers to now AI-based for everything.
So how do you advise, like, notwithstanding the, Silicon Valley, we're building a unicorn, we're going to pour capital until it becomes a thing, like the sort of the way that, for example, OpenAI is funding itself. Those are outlier companies with outlier outcomes. Everyone else who's doing this, you're talking about going back to ecosystems and being like, yo, this is what you need to lay the groundwork for. And but we're also figuring this out right this minute too.
Yeah.
In entrepreneurs, investors, even ecosystems. How do you advise them to think about investing, like going back to the investor side of things for just a second, the non-Silicon Valley investor? How are they supposed to think about investing over the next few years while this stuff is being sorted out?
I mean, the old rules are still applying.
Okay.
Right? We moved from 20 years ago on investing on a PowerPoint And maybe we still want to do that a little bit, right?
Yes.
Precede an AI with a PowerPoint with someone who knows the problem they're
Yes.
going after, the customers they're going after. It's going to happen faster than in the past, right? But soon you want to see what is the reaction of the customer. You want to talk to the customer. You want to see is there traction or is that being used so that you can invest based on that safety. And now this is happening even faster. So in fact, you have more data faster than in the past. Of course, with the big models, it's different, right?
Yes.
But those models also that were developed in Vector Institute are creating companies that are already worth several $100 million that are funded in Silicon Valley, unfortunately. But
Yes.
they are our front runners. But the other ones that are the apps, right? You're creating solution MVP faster, and you can see what is it going after. You can talk to the customer and see whether it's working or not, whether it's for the customer, it's an important change. And of course, the customers right now are trying a proliferation of things, and it's changing rapidly. So you want to invest in a team that is actually nimble and learning very quickly, and in an ecosystem where they learn from each other. And that's what's happening in Silicon Valley, right? There's a group of 80 top-notch CTOs in AI native that as soon as DeepSeek came out on Monday, by Saturday, they've tried DeepSeek on every problems.
Yes.
And by Sunday, they could tell each other, it's good at this, it's not good at that, it's good at this. So your community that learns together is important. And as an investor, I want to see that.
Yeah.
I want to see that you're not this really brilliant person who's alone, the loner, who's thinking he's going to solve everything, and investing in someone who's connected, who's learning with the community, sharing so that they can actually accelerate and remain at the top.
Yes. That's great. That's great. It's a complicated problem with a complicated set of solutions. It's easy to, and this is what you spend all of your time doing, which is like, how do you shape an ecosystem to actually drive the innovation that you want to do? It's easy to talk about, very, very difficult to do. And I think that the thing that I'm most curious about is how do you counsel these ecosystems to engender the culture change that inevitably is required? Because that's the hard part, right? Like Canada, again, we're in Canada. So the criticism of Canada is we have really smart people and we have no idea how to commercialize things. And you gave the example of, look, Jeffrey Hinton, I mean, he's British, but he Canadian, Joshua Bengio, Canadian. They're not building the companies themselves. Hinton went to Google and Google commercialized that, right? And
Element,
right, exactly. Element 100%.
Right.
So I guess my question is how do you counsel people to engender that culture change, which is really the thing that will make it go?
Yeah. This is the most important. It's always been the biggest gap in Canada.
Yes.
Right? And
Is that not true everywhere?
I was working, not everywhere.
Not everywhere?
Tel Aviv is very good at it. Sweden is very good at commercialization. That's what they do quickly.
Is it because I've heard an argument that like, if you've had an existential threat to your economy, that is the thing that you're good at. Like Israel's security, they're going to be good at security because that's the thing that's on top of it. I forget another
they're
company
good at cyber, but they
security.
also have Wix, which is a multi-billion-dollar company that just does website plug and play.
Right. So you're saying culturally they're like,
but like in terms of commercialization, they were much more, traditionally traders and like really building businesses that are actually selling stuff. They're good at it. They have a global community. In Canada, we always, I grew up not wanting to negotiate anything. And I hated negotiating. Then I learned and I thought it was fun because the game.
Yes.
Right. But people can change, and we see it with founders, right? They start their technical founder, and then 5 years later, they're a CEO.
Yeah.
They make decisions faster. They actually take risks, right?
Yeah.
And so we can change. And it's about exposing our entrepreneurs and pushing on them towards growth. Growth is the key. Don't talk to me about your technology. And that's what also oftentimes is the problem with grant writing, right? They look, is the technology good?
Yeah.
It's like, no, invest in the business, not in the technology. There's a lot of technology that are worth nothing. Most of them.
What do you do to do that culture shift for those cultures that don't necessarily, like I've talked to companies in the EU, same kind of thing. There's a risk aversion thing there. What do? Do you just have a plane and it drops cocaine from the clouds and then everyone is like,
yeah, these are
why nobody hires me to do that.
Well, first you need to support that, right? Support the commercialization, support programs that are focused on it at late stage. Again, not government trying to help, but actually private people who've done it before. But we have very successful role models. We have some head of marketing, head of growth that are good, but we need to get them enough funding so that they actually play the big game. And when our funding rounds at seed are half of the US, or I think it's 40% lower, we just checked. They don't have money to go to the US.
Right.
And then when the Series A is lower, they don't have money to actually spend on marketing and hire someone in the US. And also, like, we need to get out of like that. I want to hire people around me.
Yes.
And Tel Aviv doesn't do that. They immediately hire the head of growth in the US.
Yes.
And here we think, oh, well, we don't speak English. We have almost the same culture. I'll hire someone here. But the head of growth in the US has 20 years of relationships that he can open the door to any companies who want to sell very quickly and hire 5 great salespeople they've worked with before. And the Canadian head of growth doesn't have that. But it's totally fine to keep your technology, product development here. Yeah. But let's change our mentality to actually go to hire and develop inside the market we're targeting. And sometimes not the US, and it's fine. But it's about that, right? You cannot do everything from Toronto, Montreal, Vancouver, and Calgary.
2 more questions. Anecdotally, and there's no data yet. Anecdotally, are you seeing a shift in behavior because of the instability of what's happening in the US for people like, I could hire that person there, but I'll hire that person over there. I'll go to market over there. Or is that too early to tell and the American economy is still the prize?
It's happening in a lot of industries.
Yes.
In software, I've not really seen that happen, but there's a lot, of course, of concerns. But, we're looking a lot at AI, of course, right now. Mm-hmm. And it's so urgent. It's happening so fast that I think it breaks a lot of those concerns. Yeah. So let's do the right thing. Let's do it quick because it's happening and the train has left the station and I want to be in the train.
Yeah.
Not stay at the station.
Don't worry about what's going on. Just solve the problem. And the last question I'll ask you. So your report, by the time this comes out, your report will be out. Is there something that has surprised you that came out of your report?
I live the data, so nothing is that surprising.
Okay.
But like the depth of the drop in ecosystem value and the breadth, basically all ecosystems have dropped in value, even Silicon Valley. And those have not dropped because they had one tech company that exited at $1 billion and their ecosystem was small enough that bumped them above the 0%.
Yeah.
Basically, everybody scaled, and that's never happened before. Like even in 2008-9, it's not happened. Like, and it's 23% drop. It's never happened.
It's because of
that correction of
just
valuation from COVID, right? But what makes me happy is that when I take back from 2019 to 2025, the average growth is still 11%. And 11% is 4 times faster than the rest of the economy.
Right.
So tech is still the great investment. It's just a correction that needed to happen.
Right.
It didn't fall below like you see in the stock market, right?
Yeah.
It goes up and goes down below where you were before. You're like, oh, there's a problem.
Right.
But no, tech is growing 4 times faster than the economy, even after this correction. And I believe it's going to go back to the 15-20% a year growth, which is, 6-8 times faster than the economy. So this is the place to invest. It's the place for governments to invest, a place for investors and a corporation to invest.
Awesome. So thanks for coming on the show. If people want to check out the Startup Genome, where do they go on the current internet, if the internet still exists when this airs?
Startupgenome.com.
There you go.
I think we have startupgenome.ai, but
there you go. That's next week's company. Yeah, exactly. Thanks, Jeff, for coming on the show. Really appreciate it.
Thank you so much, Rob.
Thanks for watching. Keep building and see you next time on Decelerator.